Guest thinks that whatever form the tariffs ultimately take, they will be manageable in terms of their impact on companies. We're joined by Thomas Martin, Senior Portfolio Manager at Globalt Investments. Thomas, great to see you. Thanks very much for coming on the show.
Great. Thanks for having me on.
Broadly speaking, you think that corporate America will adjust, will survive through whatever tariff regime ultimately is put in place?
Well, different companies have different capabilities and opportunities to be able to do that. Certainly, the more diverse your product base is and your sourcing and your financial wherewithal, the better you're able to pull different levers in different places. So if you have just very narrow exposure to one particular product, you have to really, that's all you have, it becomes much more difficult to mitigate that. But the larger companies are able to do that fairly well.
One idea, Walmart, for example, they would bring in a lot of stuff from China, so they could be vulnerable, but they have a global sourcing network.
They do, and they also have the option to switch what products they offer and when they offer them, and to be able to tweak their pricing. So they have a lot of data and algorithms, just a lot of different ways that they can adjust. But in the end, they have said that they will likely need to raise prices on some of their items. It's just that that hasn't really come all the way through yet. So we're going to just have to see how that develops.
You have some stock ideas for us. Let's get to them. The first is an outfit called Samsara, and they're involved in the Internet of Things, which is part of it is attaching devices to just about everything to hook them up to the web.
Yeah, that's their asset tags. But one of the phrases that I think you can think about is that this is the digital transformation of just physical objects. But think of it in this case, it's mainly for the logistics and the construction industries. So you can put an asset tag on something so you know where it is and where it's going and keeping track of it. And in terms of the vehicles and trucks, they have telemetry things that help the companies to make more efficient use of them, and dash cams for safety, et cetera. And that's what IoT specializes in. And it's a very underpenetrated market. 90% of trucks don't have dash cams and 50% don't have telemetry. So it's an increasing market for them to be able to grow in, and they're the leader.
So the symbol is IoT. We're having trouble with the chart right now. Market cap about $21 billion. So IoT, a name that has been catching your eye. And Delta Airlines, they surprised us a few days ago by saying, hey, things aren't so bad, and we're restoring our financial forecast for the year.
Yeah, this is one that's sort of emblematic of what's happening on the demand side effects of tariffs, just for consumers and for corporations and for their ability to plan and to kind of just move forward with life, is that they were seeing in prior quarters what looked like was potentially a slowdown in demand for travel. And so they removed their full year guidance. They were only making a guidance about a quarter out, just unsure of how this was going to shake out. But more recently, as you said, they beat earnings and they restored their full fiscal year guidance. And there's a couple of things going on there. Is that one, the capacity in the industry is behaving rationally, and Delta is also rationalizing its own capacity and being able to segment their offerings and pricing in the cabins. They are seeing that the premium customer is doing well, international is doing well, corporate is doing well. So they think that we're going to get through this and that the demand is going to remain okay. It's not back to where they thought it was going to be when we thought it was going to be in the first quarter, but it's certainly better than expected.
And then finally, you like the look of a company called Fiserv. FI is the symbol. Remind us what they do. Tell us what the attraction is.
So Fiserv has two main segments, one of which is payment processing, and the other is just services to financial institutions. Think of it as really a back office, behind the scenes kind of company. But as far as their payment processing, think about when you go into a restaurant and you use your credit card in one of their machines to pay for your meal. There's a lot of technology behind that and interconnections with bank accounts and banks and processing. But there's also some value-added services that go along with that. And their business is called Clover, which is sort of the premium, in that area. It's a fragmented market. It has a very large total addressable market relative to where Fiserv is currently. And the volume had a little bit of a hiccup due to some one-time items, or at least we presume they're going to be one-time items. So we think that volume growth is going to come back. And in the meantime, with the stock being off, it's one of the few companies that's not trading at an all-time high in the market these days. So we think that there's some room left on the table at a decent valuation to pick up a true winner.